Railroad Accounting Principles. Final report, September 1st, 1987. Volume 1. Summary of the report. Railroad Accounting Principles Board. Is your letterhead. Railroad Accounting Principle Board. Chairman Charles A. Bowser. Charles W. B. Bath. Richard E. Briggs. J. L. Mahaffey. Merton J. Peckle. Gordon Schillinglaw. Rondell Young. Executive Director Charles E. Yeager. September 1st, 1987. The President of the Senate and the Speaker of the House of Representatives of the Railroad Accounting Principle Board is pleased to issue its report as required of Staggers Rail Act of 1980, the Title 49 U.S. Standard Code 11167, Volume 1. Summary of report contains railroad accounting principles explaining how the principles apply to the cost determinations and made in regulatory proceedings before the Interstate Commerce Commission. Volume 2. Detailed report discusses these matters in greater detail, elaborates on the factors the board considering in reaching its conclusion. The reports are a culmination of more than two or one half a year's deliberation. 2.5 years deliberation by the board, during which time the board received comments of the Interstate Commerce Commission, the railroad industry, shipper groups, and other interested parties. The comments contributed significantly to formulation of the principles of recommendation contained in the report. The general consensus of the report as a whole does not mean that the board reached the unanimous opinion of every aspect of the report. For certain issues, the individual board members preferred different approaches. The board believes, however, that its conclusion recommendations will assist the ICC, Interstate Commerce Commission, in the determination of railroad costing, and therefore it's anonymous in its decision to issue the report. Charles A. Bowser, Chairman. 44-1 G Street, Northwest, Room 4047, Washington, D.C. 20548-202-275, 1633. Executive summary. In accordance with the congressional mandate, the Railroad Accounting Principle Board, the RAPB, established the 8 railroad accounting principles to govern the determination costs, specifically regulatory purposes of the Railroad Accounting Principle Board. Also made several recommendations to the Interstate Commerce Commission for implementation of these principles. The Railroad Accounting Principle Board believes the implementation of the Railroad Accounting Principles it recommends that will help to make railroad cost accounting regulatory purposes more sound, consistent, and economic accurate. The Railroad Accounting Principles. The Railroad Accounting Principle Board has established general principles for 4 specific principles summarized below. For the full text of the principles begins on page 9. The general principles are casualty. Costs are should attributed to the cost of objectives of the causal relationship exists. The cost would not have been incurred but the requirements of the cost objective. Homogeneity. The cost information shall be organized in homogeneous cost pools. Practical costs related to information shall be feasible, obtaining effective determined materials and amount. Data integrity. Cost related information shall be valid, accurate, and variable. Specific principles. Etny. The railroad's etny shall compromise the activities of affiliated railroads and their related railroad-related affiliates. Cost of capital. Cost of capital rates shall be weighted average rate computed using the proportions of the debit equity determined by the market values of their current market rates. Assess valuation and related expenses. Assess should be valued at either the value of the resource foregone by the entity to acquire the asset of the government accounting assessment principal costs. At the current market value, depending on the regulatory application. Productivity. To measure the cost of the change accurately indiced by the railroad regulatory purpose shall incorporate changes in the productivity as well as in changes in changes in input prices. Effectives of the principle. The principles adopted by the Railroad Accounting Principle Board will affect the specific regulatory applications as follows. Revenue adequacy. Return on the investment shall be calculated by the railroad entity as a whole rather than individual railroad companies. Transaction with other reclassifications between railroad related. Yeah. Affects principles. The principles adopted by the Railroad Accounting Principle Board will affect the specific regulatory applications as follows. Revenue adequacy of return of the investment shall be calculated by the railroad at any whole rather than the individual railroad company's transaction with other railroad classifications. Railroad related or non-railroad related statuses are to be recorded, but the fair market value of the net investment shall be consisting of the historic net assets less deferred tax credits rather than net assets. Only the calculated return on the investment shall be compared with the nominal current market cost capital rate of the railroad industry where appropriate individual railroad maximum rate. When standalone costs are used, costs shall be reflective as the current market value at the time of the entry and hypothetical competitor or discount cash flow method applied, but the after-tax best basis preferred to determining the return of the return asset, although the methods of recognizing the time and value of the money is also may be used. The competitive access to extent the cost of the factors relevant to the cost incremental cost of the overtime period for which the access is granted. Abandonment and subcharge available costs, including opportunity costs, shall be used. Minimum rate and long canon factor available costs shall be used. Rail cost adjustment factors to measure the cost of the change accurately. The railroad the RCAF shall include the appropriate productive measurement. That is, the railroad cost adjustment factor shall be included in the appropriate productive measurement. The general purpose of cost-cutting cost variability should be determined on using regression analysis. Individual railroad costing ecclesiastic. Individual railroad ecclesiastics may be estimated with regression equations derived from national poll data. The use of national poll data appears to only one particular approach with regression analysis at the present time. However, much more of the individual railroad is railroad time series data accumulated in the future estimated and individual railroad costs of ecclesiastics may be used in the individual railroad's data. Regression analysis should be updated periodically. Historical expense information shall be collected on the railroad entity conforming to regular general accepted accounting principles for the sufficient detailed cost pools presenting in the R1 reporting agencies as recommended to be continued practical reasons. Recommendations which the Interstate Commerce Commission currently regulatory practices can remain intact. Implementation of the principles will require certain principal practices to be modified by the Railroad Accounting Principle Board. Makes following administrative recommendations to the Interstate Commerce Commission. The Interstate Commerce Commission should require independent accountants to comply with the statements of auditing standards in number 335 American Institute of Certified Public Accountant statements, the standards, sessions, engagements, and other successor pronouncements, preparing reports using an agreed upon the procedure to extent of the Interstate Commissioner Commerce is usable to obtain financial report railroad related affiliates to describe the entity principles transaction between the railroad related affiliates shall be recorded the fair market value in same manner as between the railroad entity and others. Within 18 months of the Interstate Commerce Commission should be implementation appropriate and productive measures that after the study of the public participation for further study in the uniform cost system appropriate public participation shall be undertaken and completed within 18 months. The Railroad Accounting Principle Board has identified some of the subjects from the further study, and the Interstate Commerce Commission should delay implementation of the URSCs, which is Uniform Rail Cost Systems, until studies are complete. And general purposes cost system used by the railroad should be reviewed not less than every 3 years for potential updating through the formal permitting of all interested parties to participate. The Congressional should monitor the implementation of the railroad accounting principles within 2 years after the date of the report, annual thereafter, and the ICC should report to the Congress the status of implementation of the railroad accounting principles. Railroad Accounting Principles Final Report, Volume 1, Summary of the Report.